Hello, everybody. So recently I had a few friends ask me my opinions on where I think the price of Bitcoin might be headed short, medium, and longer term. So I figured why not just put together a video, share my price chart analysis, and share some targets that I'm looking at for price, as well as explain how it is that I reached the conclusions that I reached. But before I begin, what I need to do is highlight that I am not a financial advisor, so anything I say in this video should not be considered financial advice. I'm just sharing my analysis and opinions for entertainment purposes only. The other thing that I'd like to say is that in trading, there are no certainties, there are only probabilities. And with that, what I'd like to do is start by looking at the price of Bitcoin from its inception in 2009 to today. This is a monthly price chart, so each of these green and red candles are represent 1 month of price action and trading action. As you can see, the price of Bitcoin has gone up over time quite exponentially. In fact, it's considered to be the single best performing asset of all time. So, a Bitcoin has what we call 4 year cycles that are determined by an algorithm. And each of the cycles has a low, a high, and then goes down to another low, followed by another high, and another low, and another high, etc. These lines here, the vertical lines that you see, are what we call the Bitcoin halvings. And in the algorithm, it is predetermined that Bitcoin's allocation of Bitcoins as rewards to miners that maintain the network is cut in half. So every 4 years, the miners get half as much Bitcoin as they did before the halving, after the halving happens. And the halvings usually happen right before the major parabolic upward movement of price. So as you can see, the halving happens, the first cycle, and after the halving, price goes up by 7,105%. Then price reaches a peak and then goes down and finds a bottom and then proceeds to going back up. The halving happens, price gets parabolic, reaches a top, finds a bottom, and then starts to kind of go sideways and a little up until the halving, and the halving price goes parabolic. The next halving is coming up in April. And looking at previous cycles and what price has done after the halving, we can only assume that the price is going to go up quite a bit after this upcoming halving. Now, one of the things that happens with people that invest in Bitcoin is that unless they know the larger cycle, then they oftentimes get very scared when the top is reached and what we call the bear markets happen. And price, as you can see, goes down quite a bit during these bear markets. The first bear market, price went down 93%. Second cycle, bear market, price went down 88%. Third cycle went down 85%. These red boxes here show the decrease in percentage. And the last cycle that we just had, the price went down 79%. And we will, in this cycle as well, after the halving, once the price does go up parabolically, or continues to, in this case, go up parabolically, we will reach top and there will be a bear market. I don't know how extreme the upcoming bear market might be because there's so much bullishness in the market with all these large institutions like BlackRock launching ETFs, and those ETFs have been hugely successful. And in fact, collectively, these ETFs have been purchasing 12 times more Bitcoin than is being mined by the miners on a daily basis. So, as you can imagine, when demand goes up and the supply stays the same, or in this case, after the halving, will be cut in half, price goes up quite steeply. So what we see here is that, okay, price goes up after the halvings. Price goes up after the halving. Price goes up after the halving. What we're seeing is that after each halving, the price goes up less the following cycle to the previous cycle. So there are diminishing returns on the gains. So what I've done here is I have figured that if after this halving price only doubles, so keep in mind that last cycle after the halving price went up by more than 300%. So even if we figure that there's a diminishing return and price will only go up by 100% after this halving, then what we're looking at is a price of more than $100,000. So here it's 102,300, but more or less within a range, give or take $20,000 of that price, I think is a very safe bet. And for me, I figure for my investment, I will, from the halving onward, at least expect to double my holdings in terms of dollar value. Now, one of the things I wanted to bring up is, I don't know if you guys know this or not, but the US dollar is actually doing the opposite of what Bitcoin does. So Bitcoin is a great store of value. Why? Because its value is going up over time. But the US dollar has actually decreasing buying power over time due to inflation, annual inflation. And indeed, since 1900, the buying power of the US dollar has declined by more than 90%. So this is why the CEO of BlackRock, Larry Fink, has come out and said that Bitcoin is a flight to safety, that it's a great store of value. And just looking at the price here, price chart over time, that becomes very apparent. So now what I'd like to do is show you guys some of the price targets that I'm looking at. What am I thinking in terms of where price might be headed in the short, medium, and longer term? So as I said on the Discord, what I've been looking at is I wanted to see whether price is going to maintain itself above this channel that Bitcoin's price has been staying in ever since 27th of February. And I wanted to see whether or not 27th of February 2023, sorry. So price has stayed in this channel except for this one time where it went down below the channel and dipped below it for several weeks between August 2023 and October 2023. It shot above it in October and went up and down, has been going up and down within it since October, except that just recently the price went above this channel. And we closed a weekly candle, in fact, above that channel. And if I zoom into the daily, you can see that we actually closed several daily candles above this channel here. And price is very much hugging the top line of this white channel. So let me go back to my weekly here. The other thing I've been looking at is, let me get rid of this here and let's do it together. So if we look at the Fibonacci retrace of the previous high to the previous low, then what we get is previous high, previous low, and we go across here. What we see is that price closed a weekly candle above this golden yellow area, which is referred to as the Fibonacci golden ratio. And we closed last week's candle above this, and I'm watching to see whether this week's candle confirms the breakout above the 0.618. But what I wanted to say is that, let me share another chart with you guys here. Hold on a second. Where was that? Not that one. Is this the one? No. Oh, you know what? It's over here. There we go. So what I wanted to share with you guys is that this is the first time in its history that Bitcoin's price went up above the 0.618, or the golden pocket of the Fibonacci retrace, before a halving event. So you see here the halving, the upcoming halving in April, and our candle, which closed the previous week, and this is a monthly view, but let me go to the weekly view. And so we closed the previous week's candle above this golden pocket area. Well, this is the first time in Bitcoin's history that it's done that before the halving. So that's a really big deal. As you can see, previous cycles, the price does not go above the golden pocket before the halving, doesn't go above it until after the halving. And it's the same for the other cycles. As you can see here, doesn't go above it until after the halving. In fact, in this one, it went down after the halving and then went up. But either way, what happened this cycle with price going above the golden pocket is a very big deal. And price target wise, what I'm looking at based on the Fibonacci is if we hold this level, so if we hold the 52,000 and above at the close of this coming, or this week's candle close, which is this coming Sunday, then I'd definitely be looking at Bitcoin to be reaching for the next Fibonacci level above us, which is the 0.786. As its target in the kind of short medium term. So in the next few weeks, I would say. In fact, I would say that the probability of us reaching this next Fibonacci level, which is around $58,000, is really quite high, and we could actually do it pretty quickly too. The 0.786 Fibonacci retrace level is also not as strong as the golden pocket. So once we do reach the 0.786 or the 58,000 area, we will no doubt find some resistance there. However, this line is weaker than what we have already crossed. And if we can confirm staying above it, then I think that it's safe to say that price will go and reach for the 58K, the 57.9 area, and can do it pretty quickly too. It will not be hard for a price to reach the 57, 58K area if we maintain 52K by close of this week's candle Sunday. So that's one of my price targets based on what we do in the next week will really determine whether or not we'll be reaching for the next Fibonacci level. But the other thing I wanted to show you guys is that Bitcoin has broken out of several patterns. And what we see here is a um, what we call a broadening wedge pattern, or a gramophone like pattern. And when the price breaks out, as it has here, of this kind of pattern and stays above it and confirms the breakout, as it has here. This is a daily view, so it's confirmed and stayed above this trend line for quite a few days here. So the price target for this type of a breakout is you measure from the top of the broadening wedge where price broke out of to its bottom, and then go 50% of that roughly, and then take it to where the price broke out at the top to get your measured move. And that takes us at roughly 57.4. Let me see. Let's get a little bit more precise here. Okay. So this price takes us to about 57.5. So 57,500. And so that's, again, similar to the price target for if we were to find the 0.78 Fibonacci level, which was at about 57.9. So, I'm eyeing the 57.5 to $58,000 area next if we hold the 52,000 area in come this Sunday night, Eastern time. Other patterns that I wanted to share with you guys that Bitcoin has broken out of, and the price targets that I'm looking at based on these breakouts is as follows. So firstly, Bitcoin created a cup and handle formation. So here you can see the cup and a handle that it started forming all the way back here in May 2022, and it broke out of it in October 2023. The price target for or the measured move for this pattern breakout is the top of the neckline of the cup, measured to the bottom of the cup, and then up, so 75% of that total. So if we do this, and then you take the arrow and you put it at the neckline, and the target that you get is 50,932. And as you can see, we've already reached that target. We've in fact surpassed it. So we're sitting on top of that target. However, after it broke out of this cup and handle pattern, Bitcoin also broke out of a much larger formation, a head and shoulders formation, this purple pattern here. You see the left shoulder, the head, and then the right shoulder, and the dotted line here is the neckline. So the breakout target for this pattern here, which you can see price clearly broke out of, so the target for that takes us all the way up to $109,500. So, but this target here is my longer term target. It's going to take at least a year for, in my opinion, at least a year for price to reach this target. In fact, I personally think that around 100, between 100, 120, or between 90 and $120,000 is where we're going to see this market cycle's peak price. But I don't think we'll reach it until the fall of 2025. So that's what I'm looking at, but I'll be analyzing along the way, and I might change my mind, but for now, that's what I'm thinking. And what else did I want to share with you guys? I wanted to share so as you can see, if we take a trend line from the previous top and take it over the top that we reached when the ETFs were launched, right here, then you can see that price also broke out of that trend line. So that could have been quite strong resistance, but it wasn't. So that's all quite bullish, actually. And what I was a little bit concerned about was if we look at the candle formations. So what I was watching, let's say, what I was watching is that the on the daily a couple of days ago, we had what's called a hammer candle. This red candle here with the long wick going down that looks like a hammer. Um, Hammers at the top of an uptrend, which is what we've been having, sometimes signify a trend reversal. So I was watching to see whether the following days confirmed that this hammer was going to create a trend reversal towards the downside. And so far, what I'm seeing is that, there's mainly been indecision in the market and we're kind of ranging. So I wouldn't be surprised if we kind of ranged between, I would say, 52.5 and $50,000, or even as low as $49,500, $49,200 for the next week or so. And then what I want to see is what the weekly candle close looks like for this Sunday. So far on the weekly view, it's all quite bullish. As you can see here, we didn't get any kind of long wicked candle for the weekly close. In fact, this is quite bullish. So far, we're just a couple of days into this week, so we have to wait until Sunday to see what this weekly candle shows us. But the other thing I wanted to show you guys is on the weekly, our momentum oscillators are looking pretty good. In fact, so the stochastic RSI here that shows the momentum in the market is facing up. The blue line is above the red line, which is quite bullish. And we've got a ways to go before it reaches the top of this oscillation or cycle and starts to kind of reverse and come towards the downside. So that's all quite bullish. However, if you look at the daily time frame, the oscillators are starting to turn downwards. And is this cause for concern for me? No, not quite yet, because the oscillator might not actually reach below the 80 level mark. And at times when the market is extremely bullish, what happens is the oscillator will come down, and instead of going through the 80 level, it just bounces back up and it starts the beginning of a whole new upward trend in price. And then it kind of fizzles out and we might do the same thing, go back up. So, however, if it does go below the 80 level mark, then I'd be looking for it to continue down. And as it continues down, what happens is that the price, the momentum starts to decline and price starts to come down as well. And we might see a correction. And, corrections in the Bitcoin market are very normal and to be expected, in fact. And if I show you the longer term chart here, as you can see, price, even during its uptrends, even during the parabolic uptrend parts of the Bitcoin cycles, you've got, if you look on a monthly level, for example, you've got some candles. So some months we see declines, and the declines are somewhere. You see these red candles here. So these declines vary between 20 and 40%. And but it still doesn't mean that the general trend is not still parabolically upwards, as you can see. So recently, after the ETFs were launched, we did have one of those dips, and we went down by 20%. So this is the $49,500, $600 that we reached, the top that we reached right after the ETFs were launched, and we went all the way down to 38.5. That's roughly a 21% decline. So these are to be expected. And as we see the oscillators, let me go to the other chart here. Sorry about that. So as we see the oscillators start to head down below the 80 level, we might see a bit of a correction. However, there are two different kinds of corrections. There are time-based corrections and there are price-based corrections. So most of the time, people just think of a correction as being price going down. However, sometimes what can happen is over time, with price goes within a range. So let's say between 52.5 and 49.5, and it does that over a period of weeks. That can also reset the oscillators, so allow them to find a bottom and start curving back up. So just so that you guys know what I look at, what I'm looking at here, I look at various indicators, but this chart here, I've got the stochastic RSI, the money flow index. So RSI, let's go from the bottom up. So relative strength index, the money flow index, and the stochastic RSI, which is very much like the relative strength index, but it's accelerated, it's sped up. And so as you can see, these all three of these oscillators are kind of, battling with whether or not on a daily time frame they're wanting to go down or bounce back up. So we'll keep an eye on that. But for now, what I'm looking at is for price to, if it goes up, and if we see 52,000, 52,500 to hold by Sunday, then I'm expecting to see 57.5, 58. However, if price starts to go down, then the targets that I'm looking at, and we certainly could see a bit of a dip, that those are to be expected again. So if price does start to move down, then what I'm looking at as areas of support are as follows. So if I was setting buys, which I am not doing currently because my Bitcoin allocation is currently all in, and I've been getting back into the market since January 2023. So all my Bitcoin allocation is currently in. If we do see a bigger correction, then I might throw more money at it. But for now, I'm not getting back in, putting more in. However, if I was looking at entry points then, and the price was going down, if we do have the opportunity to get a better price buy, then what I'd be looking at is, obviously, if we break this, the top of this white parallel channel here, then I'd be looking at price to go and possibly bounce off of the 50,350-ish area, which is the top of the Fibonacci golden ratio. So the top line of the golden pocket. And if it doesn't bounce from there and it continues to move down through that line, then I'd be looking for support or a bounce in price at the 0.618 or the lower part of the golden pocket. And that is roughly at about 48,600 or so, 48.5. So that's what I'd be looking at. And if that doesn't hold, then I'd be looking at the bottom of this parallel channel, and that's at about $44,300. So if I was setting buys, what I would do for my portfolio is I would set some buys starting a percentage of it. I would set at about $44,500, just in case the price does go down that far. I don't expect it, frankly, to go further down than that. If it does, I don't expect it to go down by too much lower. So I would probably set maybe 30% of my buy, of my budget to buy at about the 44,300 level. And then I would set another 30% of my budget to buy at about 48,000, a little bit higher than the yellow line here. So 48,700. And then I'd put another 30% up here at about, you know, at, on this gold orange line here at about $50,200. Otherwise, price might find support, continue to find support on this white parallel, the top of this channel, and it might start to go upward from here. And we can measure a target for that breakout. So what we would do is we would go from, you know, the bottom of the channel to the top of the channel, and we would take 75% of that. I'm sorry, I don't know what it's doing, roughly. And then we would measure it from the point of the breakout to the top. And the target that we would get is again around the $58,000 level. So there's a lot of confluence that we probably will be looking at the $57,500 to $58,300 level in the not so distant future. So in the next few weeks, I would say. And I think I'm going to leave it at that. Just, you know, comment if you have any questions, and I will try and get to all of them. Thank you so much. Much love.